Hello and welcome to this price update with fundamental news pertaining the oil market. In this video, we will discuss the latest developments in the oil market, including the UK's insurance of Russian oil and how it affects the global oil prices. We will also look at the ethical implications of this practice and the impact it will have on price if the UK will stop their companies from transporting and insuring Russian oil. So according to a recent report by the Centre of Research on Energy and Clean Air, UK insurance firms have insured over 120 billion euros worth of Russian oil since March of 2022. This has raised concerns about the ethical implications of this practice, especially after Russia's invasion of Ukraine. It is not illegal to transport or insure Russian oil, but it has sparked a debate about the role of the insurance industry in supporting unethical practices. So let's look at the article and the companies involved. So according to the Center for Research on Energy and Clean Air, we have an article, Ensuring an Invasion, UK insures 46 billion euros of Russian oil since the sanctions. So the specific areas of this article that I'd love to tackle. So the largest insurer of seaborne Russian oil globally insured ships that transported Russian oil worth over 120 billion euros from March 2022 after Russia's invasion of Ukraine until the end of November. So we have some key findings that we can talk about. Firstly, in the 12 months since the oil price cap in the 5th of December 2022, about 46 billion euros of Russian oil has been transported on tankers using UK protection and indemnity. So what they are talking about when they're talking about the indemnity, they're talking about a contract. So in contract law, an indemnity is a contractual obligation of one party to compensate the loss incurred by the other party. So it's just a security or protection against loss or other financial burden. So that is what they are talking on the first point. Then coming to the second point, about 33% of all the Russian oil by volume was transported on tankers insured in the UK since the sanctions were implemented until early November of 2023. So it's about a third of oil imports around the world. Then lastly, we have a majority of the Russian oil carried by tankers was insured in the UK. And 31% of the worth was 14.4 billion euros, followed by diesel at 22% worth. In terms of euros, it is around 13.3 billion euros. So let's look further. So when you go down, you will see that while there has been a decrease in insurance companies from the UK covering shipments of Russian crude, Russian oil still remains highly reliant on vessels insured in the UK for transport. So what basically it means that most of the oil that is being transported by Russia to the west or to Europe, it heavily relies on UK's covering the shipments for the crude oil. So in December of 2023, 62% of Russian oil products, including chemicals and liquefied petroleum gas, were carried on tankers owned or insured in countries that implemented the price cap policy. So these are the same companies that sanctioned Russia. They are the ones that are carrying Russian oil. So basically this is what it means. So in the analysis, we found out that 33% of all Russian oil by volume was transported by these tankers from these countries. So after reading just this, I have a question, or something that comes to my mind is, what will happen if UK will stop all these tankers from taking or transporting the oil from Russia? I just want to know, guys. You can comment below. But according to me, if UK vessels were to stop insuring Russian oil, it could potentially disrupt the transportation of all the Russian oil, leading to changes in supply and demand dynamics, which in turn could impact the price of all oil in the global market. So the UK has been a significant insurer of Russian oil, with over 120 billion worth of Russian oil being insured by UK firms since March of 2022, as I've stated before. So however, the extent of this impact will depend on various factors such as the availability of alternative insurance options, like other countries checking these tenders of transporting the oil to the west. Other things will the response of other market players coming into the market, and the geopolitical situation around the world. So therefore, while a cessation of the UK insurance for Russian oil could potentially influence prices, the actual outcome will be subject to a range of complex and interrelated factors. So it is not just one factor alone, but prices are influenced by a variety of interconnected or intricate factors. So when it comes to fundamental news, this is what I had for you for today. We will go and look at the chart so we can predict, or we can see where the price of oil will probably go or move towards this end of the week. But since last week, guys, I haven't been posting about oil. It's because as you can see on the chart here, we have been on a long rally for, I don't know, since January. So because my strategy relies on pullbacks, there haven't been enough, as you can see on this chart. So let's just look at the chart, guys, then we'll come back at the end of the video. Looking at the price chart for Brent, we can clearly see price has been aggressively moving to the upside, moving from a low of about $76 per barrel to a recent high of $79 per barrel of oil. What has been driving this upside move has been both the news in Ukraine and Russia, to the Hamas war and Israel, with Houthis blocking and attacking oil tankers transporting oil to Europe, causing ships to abandon the route, taking a longer one, which has resulted in the price increase for transporting oil. So all these factors have put pressure on the supply of oil. Even the route is longer now, causing delays of oil deliveries, which has subsequently caused oil prices to have a move to the upside. So as you are aware that our style or system relies mainly on pullbacks. As you are aware, our style or system relies on pullbacks and use of Fibonacci retracements to measure the pullbacks. The market has not been friendly to us, causing us to miss quite a number of entries, as prices have been having a hard time completing our setup, as price moves so fast on both directions, on the upside and on the downside. So if we can just have a look what happened last week with the entries that we missed. On the 30th of January, we had a perfect entry right here. What's the price here? The price was $81, 81.24 US dollars, but our setup was never completed. We ended up taking a loss. Just I think this was our stop loss. Then we had our setup, or our with 1 hour. So we had signals for sales the following day. So as we see, we were supposed to, market was supposed to come up to 76.8 with the Fibonacci retracement, but it never completed our setup, so we missed this one. And if we could have entered, we were going to have a lot of money. Then on the 2nd of February again, price was, we were supposed to have another pullback on the upside, just coming here, but price never, our setup never completed, so we missed again another entry. Then again, yes, again on the 2nd, because this one was supposed to be a signal from the 1st of February. So again, we had an incomplete setup because the pullback was supposed to come right here on our value area, but it never completed, so we also missed this one. So I think we the number of trades we missed are about 3, because even this one we missed. See, then yeah, we ended up taking a trade on the 5th of February, but it ended up being a loss. As you can see, this is our value area right here, but price ended up moving up, so we had our stop loss right yeah, I think we had it here. So at 78.43 we ended up taking a loss, so we were still waiting for a buy. So what I've been waiting for was a setup since yesterday. Price was supposed to move or retrace to our value area around this area here. Excuse me for a moment here. We were supposed to take a trade just right here at sorry, at 78.12 US dollars. So price again never completed our setup, so now we'll be waiting for the next setup. We'll just stay in cash, guys, not taking trades haphazardly. So this is come on, man. So we're still waiting for this setup just right here. This is our value area just here, so we'll have a buy entry at 78.81 cents. Then we'll have our take profit just right here. Then we'll have a stop loss just below, I think, yeah, just below. So if you can see, guys, this would be, I think, 1:4 or 1:5 in terms of risk to reward. So yeah, maybe we can, yeah, maybe we can show some of you how we take our trades. So just follow through, guys. I won't be saying much, just watch. So this is basically how I take my trades, but before I take, I have a setup on for our take profit. I like to start on the stop loss, but we'll set it up later. So this is basically how I trade. So my system is almost like there's this guy, I forgot his name, but he calls his setup or his system, you just set up and go. So this is what we're also going to do. So what we're going to be basically doing, we're going to buy 10 barrels of oil. If price so we're just going to judge how price reacts. Maybe we're going to add more, but basically, guys, this is what we do. I think there's something, oh yeah, there's something wrong. For our take profit. So yes, so we now have a setup, guys, for our take profit. Let me just check. So yeah, no, there's something wrong here. This is the setup we're now looking for. Yes, still okay, maybe we can move our buy entry just yeah, our buy entry just up there, then our stop loss just below. So I'll use this candle just right here to just beneath it to have our stop loss, then our take profit up there. So yeah, so that's it according to our chart, guys. This is what we're anticipating in the markets. Price will just move on the downside, then we're going to take our trades here. We've already put our orders here, so this is what we're expecting, guys. That's it for today's video, guys. Thank you for watching. I hope you like and subscribe to the video. Thank you for supporting us. Cheers, guys.
The path of the stoic brain.